Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Equity markets trading substantially lower on the day. No lack of news to drive that, actually. We saw the president meeting with business leaders as well as labor union leaders today at the White House, and the president actually giving his first address to the public since being reelected. We hear the tone from the president, certainly, that he is looking forward to resolving this budget issue and not going over the fiscal cliff. But one has to wonder whether we can reach a bipartisan solution, and I think that's what a lot of traders are worried about at this point with the uncertainty surrounding that. We continue to hear tones from the administration that tax rates will increase, the Bush tax cuts will go away. That has the market concerned for a variety of different reasons. We also see that what we see in the interest rate market off of that is we see interest rates starting to climb. I will say it does look like the 30-year bond market is reaching the top end of a trading range, but there are a whole host of factors that could help the 30-year bonds actually push through the top end of that range and trade higher. One of those being, certainly we heard from the FOMC, their meeting minutes today. They didn't paint a very rosy picture of the U.S. economy. We've been saying all along that momentum in the U.S. economy is really waning, and it's kind of laying flat on its back, and that's what the FOMC meeting minutes painted a picture of today. Some FOMC meeting members actually saying that there may be a need for additional quantitative easing in the form of the expansion of Operation Twist into the early new year. So that's something that we'll have to pay attention to in the interest rate market. One other thing that certainly was on all traders' radars today was Israel. Israel actually targeted a militant leader from Hamas and killing that leader. That certainly flares up tensions in the Middle East, and you're starting to see the rhetoric through all of the news wires. This will drive commodity prices, but not only will it drive commodity prices, it will also have effects on financial products like equities and interest rates, and I think it could certainly tend to push interest rates a bit lower, prices higher, because of the fear of what could happen over there, what could shake out. So I think you could see money fleeing some of the riskier products and going to some of those safe haven assets. So there's no lack of news to drive markets in either direction at this particular point in time. It's going to be a headline driven type of market, I think. Something that we're going to have to continue to watch, see what comes out of Washington, D.C. All eyes are going to be focused there for the time being until we see what happens with the fiscal cliff. But also watching some of these other events, particularly over in the Middle East and the sovereign issues that continue to go on in Europe. Please give me a call at 888-596-5817 to discuss these opportunities and others. As always, remember, futures trading is not suitable for everyone and does carry a high degree of risk.